Good morning. I'm Ryan Seacrest. Welcome to Forex.Today. Wait, no, I'm Wayne McDonell. Yeah.
G'day, mate. How are ya?
Haircut? No. It is pretty rocking though. Pretty rocking. G'day, mate. My name is Wayne McDonell. Welcome to Forex.Today, the YouTube community. More than 19,000 foreign exchange traders. How you doing? Hope you had a nice weekend. I've already been trading, 15 hours or something. So it's always funny to say, hey, welcome to, it's Monday, the beginning of the week. I'm like, no, dude, I'm already on day 2. So very interesting. Glad you're here. If you haven't woken up tired Monday morning, you're not doing it right. So let's get on with it. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Yes, my name is Wayne McDonell. I'm the Chief FX Market Strategist for Tradersway. Also the guide and leader of this organization we call Forex.Today, where I teach you technical and fundamental analysis with the overriding goal of helping you put together or teaching you how to put together trade plans. Now, why would Tradersway care about something like that? They want you to succeed. They would love for it if you could take control of your trading, do some analysis, create some strategies, have the patience and discipline to set them up properly, and then trade them successfully. That'd be great. Why would a broker care about that? Because you would stay a client for years and years and years and years and years. They would provide a service to you. You would pay the fees. Everybody's happy. So if you want everything to be right in the world, if you want to bring joy and happiness to your life, you will create an account at Tradersway.com. Start with the demo. Check out the execution speed, the swaps, the spreads, customer service. And then if they earn your loyalty and respect, then you'll take it to the next level when you are ready, and you will open up a live trading account, Tradersway.com. Start that relationship today. So while you're here, ask questions, get involved, and I'll do my best to address your needs and your concerns, because you are my sweet baby. Right, Stevie? All right. So what we got here? Well, actually, we can do this. Hang on, I got to move this out of the way. One of the things on my mind, and I just recalled it, I don't know why. I want to go over the 10-year. Well, let's start with the 10-year and see if I can remember what I'm doing 10 minutes from now. We'll start here. Okay, 10-year T-note earlier today hit 1.8%. And it's come down from 1.8 all the way down to 1.77. Ha! Yeah. But that's pretty amazing because it was 1.4, and I've been telling you to watch all this. This shows us sentiment. Now, I'm sure you have been reading, okay, economic or analyst reports. Have you? JP Morgan, Bank of America, Morgan Stanley, Goldman Sachs. I'm forgetting somebody, but they've all changed their outlook toward the Fed, and much more aggressive than I thought. So I might be in the situation where maybe I'm overly conservative. Now, all these banks seem to be much more aggressive, but maybe that's baked into their culture because they want the Fed, they want QT. They want it, they need it. So maybe they're baking in more rate hikes and QT than I'm expecting, but because that's what they want, that would be their point of view. But anyways, I seem to be much more conservative, so we'll have to take a look at that. Hey, good morning, Peter. And what's up with the crossbow? Oh, I can't tell you. It's just there. Anyways, so I need to go back and double check, make sure that that I still agree with myself. Remember, only a strong person can admit they're wrong. A weak person cannot. Okay, so anyways, so here we are, 1.77. Now that's interesting because we were at 1.4 and then we went from 1.4 to 1.8 in less than a week, which is radical. That's probably 2 months worth of action in a matter of just a few days. And this has everything to do with the Fed meeting minutes that came out on Wednesday. Not non-farm payrolls, but the Fed meeting minutes, which shows you the difference between fundamental and news. Yes, unemployment rate dropped to 3.9%. Yes, 200,000 people got jobs. Yes, but what was way more important was what the Fed said in its meeting. Okay? Okay, so anyway, so that's that, but let's see if we can get even more radical. Check this out. Will it give it to us? Check this out. Here's the big news. The 10-year German bond almost went positive. Oh, my God. Look at that. So the United States is on its way to 2%. Germany is thinking about actually maybe giving you an interest rate. Isn't that amazing? Look at that, huh? We were, negative 0.5, then we were negative 0.4. Look at this. We're almost zero. Amazing, right? But what's important, of course, is not the interest rate, but the real yield. Okay? So, really, interest rates in Germany are probably close to negative 5. That's why these have to go up. Why? Okay? Inflation minus this. Okay? Inflation minus interest rates. Equal the real yield, something like that. Or I guess it'd be yield sub R. Whatever. And right? So interesting. So this is a big change, though. It's a big change. So interest rates are skyrocketing out of the United States. Skyrocketing. And look at this, even in Germany, from negative 0.4 to less than negative 0.1. Basically negative 0.4 to 0 in a very short amount of time. Okay? Notice this was already happening. Then we had Omicron. Okay? And Omicron is bad. This is bad. Boo! That really messed things up. But now we're back on the train, on the gravy train. Okay? Now, yesterday in the day trading group, I was talking a little bit about this idea of consumption over productivity, in particular productivity per capita, right? Per capita productivity in as compared to personal consumption expenditures, and how they're tied together because, well, if you're consuming one thing, you're paying someone else for their productivity. That's their income. So now they have money, so they buy stuff, which is someone else's productivity. So they get paid, and then they go buy stuff, and they buy someone else's productivity, and it goes around and around and around. Income should equal productivity, right? GDP is equal to GNI. Now, right? The interesting thing is we have inflation now because the government, and not the central bank, by the way, the federal government added money without productivity, and suddenly we just got crazy inflation, right? I was listening to a report this morning talking about, and it was pro-Democrat White House. So I'm going to get political here, even though I'm sort of apolitical. I'm going to get political here because the whole report was because of the stimulus spending. Things like the child, what do they call it? Child something credit? I don't remember. So I'll give you an example. I'm not poor, but my family has received thousands and thousands and thousands and thousands and thousands of dollars from the government because we have children. I don't know why. I never asked for it, never even filled out a form. It just showed up. And they're saying because of this, for the first time in decades, poverty has fallen. Especially in regards to children in poverty. So that's good, right? Isn't that good? See, I think they spent $300 billion on that. That's good, right? It's now only 9% of America is considered impoverished. What's the problem with this argument? $300 billion. We've driven poverty down to the lowest level almost ever. Okay? What's the problem with this argument? Anyone want to take a guess at it? Don't get all mad. Don't go political. Just let's talk economics. I'm simply right. But that's a short-sighted point of view. Yeah, I'm not being negative. I'm not saying I'm attacking the argument. I'm not attacking the person. I'm not attacking the party. Because both parties would do it. If it would benefit the party to say this, they would say it. Okay, so does anyone want to take a guess? What's the argument with this? Why is this not really a good thing? Can anyone? Yes, no productivity. Absolutely. That's the exact problem. But that's not necessarily the anti-counterpoint, let's say. But yes, that's the systemic problem. More debt, yes, so someone will have to pay for it, although they didn't really sell bonds for it, maybe. But what else? Keep thinking, guys. More expensive labor. So it creates inflation to give money, right, to produce money for no productivity. So remember, go back to the formula I was talking about. PCE, that's the stuff one person spends and consumes, right? One person's consumption. Okay? So they buy something with their money. Now that money goes towards someone else's productivity. They worked to produce a TV, or they worked at the fast food restaurant or something, but whatever. They produce some sort of productivity. You paid them money. Now they have money and they pay someone else. You see, it's just circular. The money goes around and around and around. We call that velocity. So when you add more money than there is productivity, consumption is higher than productivity, and it's not from debt because no one borrowed, because you'd have to have credit, and you don't just create credit out of thin air. So therefore, the money came out of thin air, and now you have more money than there is productivity, and now you have inflation. But what happens to the people that are currently used to be in poverty but are no longer in poverty? Predict the future here. We're talking about people a year ago were in poverty, and now they're not in poverty because they got free money from the government. How much of that money they received do you think went into investments? None. Not even a single penny. Nothing. Well, they can't, right? But they needed the money, but... So you see, like, there's this poverty trap. So here's the thing. So they're like, hey, we spent $300 billion and the poverty rate fell. Okay, it will go back up. Okay, there was no long-term return on investment on that capital. But the entire country now is facing inflation. So everyone else is poor, a little more poor than they were, because some people are less impoverished. But here's the thing. I think the inflation is going to last longer, right, than the less impoverished. So there's really, on the long term, a negative return. So the math kind of doesn't work out for me, right? Now, if you spent $300 billion and you built a bridge, that productivity, well, first of all, it is productive. Plus, you now have an asset. So you give up cash, but you have a bridge. But the thing is, the bridge pays for itself over, let's say, almost 100 years, I bet you get out of that. Okay? And that, so when you think of doing business in a country, you might forget about things like roads and bridges and seaports. But I was watching a travel show, sort of a travel show, more of a trekking show. But anyway, so they're going through Africa, right? And they're in some country in Africa. I don't remember which one, but they're going through, and it's what you expect. Some of it's beautiful, some of it's impoverished, a little bit of both, whatever. And they're going through, but it's much better than many foreigners would think. And you're like, oh, it's not so bad in this country, right? The people are nice, and the food's cool, good, and the culture's cool, and they have a generally good time. But you got to be smart in where you go, and there's a little, you got to pay a little bit here and there from the security, but whatever. But that's what you expect, right? Then they get to the border and they go to another country. They're just crossing the border, and there's a gate. And you go in, and now you got to bribe these border guards, but that's just part of doing business, right? And they go to the next country. Like literally, they go 4 feet into the new country. There's no roads. It's dirt. They go from paved to dirt, potholes, corruption, right? Lack of infrastructure, lack of institution. Which country is better to do business with, right? And all of a sudden, it comes down to, well, these things, infrastructure and institutions, are really important for an economy, right? So long story short, I don't know. I don't remember. Was it $300 billion we spent on the infrastructure package? I have no problem with that at all. Okay. So you get something like this where you have potential GDP, you have this, and then you have depreciation. This is Y star. And investment, right? That kind of stuff, where a country with investment higher than depreciation is going to do significantly better. And if your country instead looks like this, where investment is less than depreciation, it's going to kill your productivity. Hang on, I just got like 3 texts or something. Hang on. Let's make sure it's not my kids. Oh, cool. Cool. I found a band for my Rolex. Cool. Right on. I have an old Rolex. I don't remember what year it is, but the bands are hard to find now, and they're Stainless steel band is like $3,000. Like, you must be crazy. Anyway, so I found one. So, cool. For a reasonable price. Can you imagine? What kind of idiot would pay $3,000 for a watch band? Anyways, so you got to have investment. Investment creates productivity. Productivity increases what? The standard of living. So one last point, I guess, on this other model, or this other thing where we're talking about people have been lifted out of poverty temporarily. But when you create money without productivity, the standard of living will not go up. And economists should be screaming at politicians to let them know, and again, this is not politics, this is economics. Giving something without productivity does not lift the standard of living, nor does it provide an increase in self-worth. Okay? Productivity, okay, creates self-worth. How many people here on a nice summer day enjoy sort of tinkering around their yard? I don't know if you have a yard, if you live in an apartment or something, but how many people here don't actually enjoy working in their yard, being outside, messing around with the plants, messing around with the lawn, kind of just taking care of things, maybe raking leaves in the fall? It's a bit of a pain, but at the end of the day, you feel good, right? You know, yes, it's work, but at the end of the day, right? Have you ever worked all day in the yard and then at night, and then you clean up, and at night you have a barbecue or something, and you're sitting in the backyard and everything looks beautiful, and your back is sore, your legs are sore, your hands are sore, but you feel so good about what you accomplished. Right? Yeah, Johnny says, I used to. No, right. You're right, but still, there is something to it, right? There is something to it. And I believe, and I cover this very clearly and I even prove it. I prove this in my macroeconomics course, that productivity leads to an increase of self-worth, but also just literally happiness, longevity. Now, look, working down in a coal mine, okay, is not what I'm talking about necessarily. But there's to be happy, okay, or to lower the suicide rate. You can do that through productivity. It's really interesting. You can show it. And one of the things I show in that macroeconomics course is I prove everything using GDP. Here's all the countries that are most productive. But then we go through using IMF statistics, and they measure things not with GDP, but they measure with things like how long you live, how healthy you live, how long your children live, or if they die when they're 2 from malnutrition, right? They go through all of this stuff and they put together sort of how successful or happy or whatever, I forget what the measurement is, but the best countries, right? And you'll find that there is a direct correlation. Okay? Apparently, if you're impoverished and you have no work, no opportunity, and you have an unhealthy diet, therefore you're probably sick half your life, guess what? You're not more happy than a rich person. Okay? So there's some sort of relationship between happiness and productivity, and I believe that as an economist, but I think also there's one more step that people don't add that I always add, and that's entrepreneurialism. Not only do you have to have work, so look, you're maybe not happy if you have to fold bed sheets all day. That's your job, right? but you have an opportunity to lift yourself up and get a better job, and then a better job, and then a better job, right? And a better job. Like you have a path, you have opportunity. And to me, that side of entrepreneurialism, you either get the opportunity, and nobody cares about what God you pray to or who you make love to. Nobody cares. You're a good worker, you get promoted. And that's what we call opportunity. Okay? Or you create your own because you live in a world where you can go out and start your own business, or you want to be an Uber driver or whatever. And the more you work and the more productive you are, the more reward you get. That is so key. You take that away, gone. So anyways. Okay? Couldn't give them shares instead. Well, I admit that COVID was a crisis and it was challenging. But I think what the federal government and the Fed did was they overreacted. Okay, I would guess the $5 trillion the federal government spent, very little of it impacted COVID directly. Okay, apparently you can't even get a COVID test in America because there's no tests. Well, the government didn't make 100 billion of them for us, right? They're just. But what did happen? Oh, well, I guess you can get the vaccine for free, right? Was it free or cheap? I don't even know. But whatever. A lot of it did not go. $5 trillion probably was probably too much. Is all I'm saying. Because that's the federal government, by the way. It just turns out the central bank added $5 trillion. So the total response in the United States alone was at least $10 trillion. Now, if we were tackling poverty, okay, let's say we're just going to tackle poverty. $10 trillion would go a long way. Every single child in America could go to Harvard, and it wouldn't be $5 trillion. How about this? If the United States invested 10 trillion US dollars into South Africa, it could probably turn it into a first world nation. I don't know. Or maybe it couldn't. I don't know. I'm just saying $10 trillion is a lot of money. And apparently we still have COVID. And it looks like people that were impoverished are going to be impoverished in 2 years. So you're like, But we got 300 billion of bridges, which we haven't built yet. We've only earmarked the money. 300 billion out of 5 trillion is nothing. Okay? Ooh, 1.5%. Well, what happened to the other 98.5% of the money, right? So anyways. So that makes me also think, how much attention are you guys paying to, boy, hang on, my mouse is messed up. How much are you guys paying attention to QT? For example, what is QT? Don't say that I'm a cutie. I know what you're thinking, but no. I'm a cutie pie. That's for sure. But what is QT? Quantitative tightening. Great. You nailed it. What does it actually mean? Okay. Okay, well, okay. What does it actually mean? Well, let's first of all talk about QE. QE, by definition, is quantitative easing. Great. What does it mean? It means the central bank buys bonds, or treasuries more specifically, which are government bonds, treasuries, okay? And by doing so, prices go up, the yield goes down. They are lowering interest rates. Therefore, quantitative tightening is the exact opposite. The Fed has bought treasuries or other assets, and that's what we're going to get into. So now they want to sell them. They're already on the balance sheet. The Fed already owns them. They bought them from someone else. So now it's on the balance sheet. Okay? The Fed paid cash for them. So now they're going to sell these treasuries. Okay? Sell them. So someone else is going to get, let's say, a 30-year bond that they purchased from the Fed. So what does the Fed get? Cash. What does the Fed do with the cash? Destroy it. And reduce the money supply. This means if the Fed is selling, interest rates will fall, the price will fall, and the interest rate will rise. Okay? And money supply, we'll define as M2, will fall. And inflation, big I, will fall. Because it costs you more to borrow money. Because the bond market is falling. Was that helpful? Was there anything there that caught your interest? You're like, oh, I kind of knew that, but that was interesting. Anything? Or is this stuff you already know and I never have to cover it again? What part here, was all of it new? Was some of it new? Was all of this you already priced into your strategy? Okay. Be specific. Tell me. Talk to me, Goose. Most of it's new. All right, cool. See, this is what's on the mind of the market right now, by the way. Well, were you thinking to the point where you took it as far as you knew M2 would fall? Thank you. Ashish says, yeah, the part that M2 falling, and that would kill inflation, right? Milos, yeah, but remember, most of the things we were taught in school are way oversimplified. One of the things you want to look at is, like I was saying, so this is what I said yesterday, the change in personal consumption. And I was wondering if I got this right. Maybe I did it like this, GDP per capita, but it's not over, is it? It's minus. I guess maybe it's over. Is it a ratio? Anyways, what I'm thinking about is, as long as, let's do this differently. as long as inflation is 7%, okay, minus GDP of 4%. What do we have? 3% too much money. When you are in a situation like that, okay, that's inflationary. Now, typically, this is because things are good. So typically in America, let me draw over this, you would have, let's say 3% interest rates, and you'd have 4% inflation. Or let's do this differently. You have, okay, let's look at this differently and see if I can think about this. Well, no. Oh, that's right. I said in interest rates. That's the part I didn't like. Okay, again, imagine you have 3% inflation, and you're comparing that to 2.5% growth, GDP. Okay, GDP. So this is inflation over nominal GDP. Okay? So as long as that's a positive number that's inflationary, and the dollar will be weak. But under these circumstances, CPI is 3%, GDP is 2.5, which means the Fed is just always trailing a little bit behind on purpose. Okay? And it's when interest rates get to 4%, it becomes a problem, right? Because now it's negative, and that's what would slow it down. The cost of borrowing is higher than the productivity, so borrowing stops, productivity falls, and the economy goes into recession. So anyways, it's like one of those things, like don't just think one aspect. The Fed is cutting back money supply. But there might be, like for example, quantitative easing increased M2 back in 2008 M2. So we'll say 2008. At an alarming amount. Later on, Janet Yellen said, don't worry about it. Okay? Since then, so now you go to 2020, quantitative easing came along because of COVID, right? And M2, okay? So you have to then take this M2. M2 2020 is equal to M2, okay, 2008 times 2. We've doubled the amount that quantitative easing has in 2008. Okay, the money supply increase in 2008 from the global financial crisis. I want you to hear this. The global financial crisis. This was a financial crisis. M2 skyrocketed to unprecedented levels. We had never seen anything like it in the history, the recent history of the world. And then our response to COVID was to double that the first response. It's a lot. So if we reduce now this new level of M2 down, does that make the dollar stronger? No, there's still too much money. There's going to be too much demand, not enough supply. Everybody's got money. Even the poorest people in America have money. So there's a lot of money. So there's a lot of demand. not enough supply of anything. Therefore, everything will go up in price, which is now inflationary. Well, An says it not only US, but EU and stuff. But what you want to think about is, okay, let's do this. Let's do UK versus EU. Let's do this differently. Let's do Great British Pound versus Euro. Okay. Let's do Aussie versus New Zealand. Okay. Every single country was hit by COVID. Every single one of these countries actually closed their economy because of COVID. Lockdown. Every single one of them did it at least once. Okay. When is New Zealand going to raise interest rates? Okay, when is New Zealand going to start raising interest rates? Come on now. Well, thank you, White Rock. Make sure you click the thumbs up button. Come on, guys. Was there a 90-second lag? Come on now. When is New Zealand going to start raising it? Oh, they already did. Yeah. Okay. And they're likely to continue is even, okay. When is Australia going to raise interest rates? Actually, they specifically said when wage growth is above 3%. It's not even 1%. So not this year, not next year, no, not anytime soon. Should you trade them the same? Which one should you be more bullish on? The one in the process of raising interest rates, or the one that's not even thinking about it? Okay. Interesting, right? All right. Right? Battle, right? Battle number 2, right? Currency wars. Yeah. Currency wars. All right. When will Europe begin to raise interest rates? By the way, White Rock, it's way higher in the United States. According to non-farm payrolls, which came out on Friday, month over month wages increased by 0.5%. That would be 6% a year. Okay. Wade says never. Yeah. Codename says, I don't even think they know when they're going to raise interest rates. Nor do I. My point is not this year, not next year, not the year after. By the way, isn't it cool, White Rock, where I can quote the government reports from Friday and know specifically things like wage growth? This is what we should be able to do. As professional foreign exchange traders, when you're sitting down talking with a client, for example, you could be able to say that, where you're like, well, in the recent non-farm payrolls report, which came out on Friday, everyone's focused on this disappointing headline number of of, 199,000. Other people are focused on the, the unemployment rate dropping all the way down to 3.9%, which just happens to be the Fed's goal. Interesting. Okay. But I think the most important thing as far as currencies and, and wage growth is actually the month over month, which was 0.5%, 0.5. You extrapolate that out over a year, and look, we're facing 6% wage growth. It's crazy, right? Anyways. All right, so not many people have answered this, but the ECB is not going to raise interest rates this year, next year, the year after, most likely. When will Great Britain raise interest rates? When will the Bank of England raise interest rates? When will the Bank of England begin to raise interest rates? Already did. Okay. You see? This is the game we play. Are you going through your charts with this in mind? Or are you looking at your MACD and asking MACD, what should I do? I don't know. Okay. Isn't it nice to filter through some of this? Okay. Yeah, you better be. And this is more of the idea of this is what fundamental analysis is. It's not that non-farm payrolls came out at 199,000 jobs. It's not that it came out, 200,000, we were expecting 400,000. That's not even it either. It's what the central banks are doing in response to the economic situations they're in, as measured by the trend in those news releases. So Aussie and Kiwi are cousins, okay? But they're not the same, okay? Pound and euro are cousins, or at least one is Romeo and the other's Juliet. What was it? The Montagues and the Capillots? What was it? Something in the Montagues. Anyways, they're warring families, but once again, they're not the same. Well, we trade each other and we do it again. Yeah, so something like that. So that's what we do. So maybe you're like, when the markets are bearish, you sell Aussie. When the markets are bullish, you buy Kiwi. When the markets are bearish, you sell euro. When markets are bullish, you buy pound. I'm just saying. What was the other name? It was Montagues and the Capillots? Capulets. Thank you. Sorry. What? Right? In sooth, I know not why I am so sad. I haven't read Shakespeare in a while. Something is what did they say? Something is awry in the state of Denmark. Okay. Let's go through it again. Do you understand how much time I spend looking at charts? Let's do it again. Okay, daily. Okay. Cool. Daily. Here we go. Aussie's weak. Kiwi's weak. CAD strong. Pound strong. Euro weak. Swissy weak. Dollar whippity-doo-dah. And yen generally weak. So what I wanted to see is this. This, Yeah, that. Well, see, I guess I would rather see that. This makes sense. This makes sense, and this makes sense. So out of all of this, I'd say fundamentals would predict this, would predict this because Swissy should follow yen. Yet a dollar, I've been preparing you since the fourth quarter of last year that the dollar would be doing the same as the Swiss franc and yen, except in this period it should decouple. So this should be going more up, and well, it's definitely different than these. So, we're moderately cool there. CAD would be doing better because of the United States. Kiwi should be doing better because of the rate hikes, but it ain't happening. So this one is predicting up, but it's not quite working. And then Aussie's down, which makes sense. So it's not bad. The thing is, what we know is while we're trying, because these are all daily, what we know is on your 15-minute chart, it seems to be doing this. Right? So that's why I challenge you to make a decision on what you think is going to happen. We call that bias. And then around that, you create strategy. Okay? Strategy would be like when things are bearish. So let's say yen is going up, you sell Aussie yen. Okay? When things are bullish, like yen's going down, okay, I would think maybe this would go up, although it ain't. But maybe more specifically, when this is going down, that's bullish, so you'd be buying that, for example. Or you would be buying this. You'd trade pound, yen, or CAD, yen. When things are risk off, okay, right? When things are risk off, you'd be selling the things that are weak. So So you would sell Aussie yen. You would sell Euro yen. Now, I'm not saying that is going to happen. I'm not saying that is right. I'm not saying that will make you money. I'm saying that would be a strategy that you have decided upon. You know what to do and in what market conditions to do it, and at least have some reasonable answer to as why you are doing it. Which one is this? Interesting. Oh, look at that. I got the automatic fib. Isn't that nice? I don't know why it's here, but anyways. You see it updating the Fibonacci? Isn't that cool? You ask me to enter, and then you make me small. And I can't keep holding on to what you've got. And all you've got is euro. All right. Interesting that I have that there. I don't know why. Cool. Well. See what this is doing if you're watching it on a 1 minute chart. It's saying if you're a bull, this is your buy. That's your price action buy. If you're a bull. Well, I should probably ask Ryan to do a course on that. What are articulated dreams? What are you learning? Are you learning Python? Or are you learning, MT4 EA programming? What level of coding are you talking about? Right, EAs or algos? Yeah. Okay, so that's basic. Okay, cool. Yeah, that's a start for sure, especially if you're new to coding. That would be the place to start, right? But ultimately, if you wanted to be a professional, you would want to learn Python and a whole bunch of other things that you'll need to basically plug that in to get it to trade. But at least start the coding process would be Python. Yeah. Oh, look at that. Right off my gray zone. Ew, wow, wow. Now the pisser part of this is I'm shorting Aussie, so I got to be careful. Cool, right? It's called price action, by the way. I need to let you know you don't have to trade it alone. It's you who I'd like to mirror. It's you when we're in our buy zone. You don't have to trade it on your own. Stevie says, hey, on positive swap, does it mean bull or bullish or bearish strength or weakness? No, strength and weakness comes from the central banking policy, which might be to have higher interest rates, which is the higher swap, right? Higher swap. So sort of, but not necessarily. It's too simple. I mean, that's what it says in the textbooks, but it's really too simple. You can look at it as in the expected future swap, for example. Okay? So you could take it one step further. But what I would tell you, though, is that the higher the swap, the more you want to only trade toward the swap. So, for example, Mexico raised interest rates. Okay? And what happens to a currency? Okay? Well, first of all, what's happening here? This is the dollar getting strong because of Omicron. Okay? Exactly right there. It just completely 100% reversed everything. Apparently it wasn't a zombie apocalypse, and we got back to business. Okay. So, right? 22 is the top here. But somewhere in here is Mexico raising interest rates. And more interestingly, continued pace of future interest rate hikes. And yes, they are expected to raise much more in the future. So you want to take a look, for example, and see what does that mean. And you go to specification. Okay. Currently, you earn a very nice swap if you're short. And you have to pay a lot of money to trade long. Why? Well, to trade long, you are selling Mexican peso to buy the US dollar, which means you have to borrow the Mexican peso first from the Central Bank of Mexico. The Banco de Mexico. Okay? Cool. So you have to borrow that money. Well, it costs a lot to borrow because interest rates are high there. It costs you a lot of money. So you have to borrow it. And then you invest it into the dollar, which might be going up, but it also doesn't pay you anything. Or very, very little. So it's going to cost you a lot of money to do that trade. precisely because it costs a lot to borrow peso because of their high interest rate. And yes, you might make money on the appreciation of the US dollar and the weakness of peso, but you're not going to earn much on the swap. So you're going to have a big negative swap. Now, the negative swap should be nothing compared to how many pips you make and the value of those pips, but nonetheless, the cost is high. In reverse, you can borrow the US dollar for almost free, leverage up like crazy, buy the Mexican peso, and earn that positive interest rate that they pay. Because what you're doing is you're lending Mexico the money. Well, what does that mean? Okay, you take your US dollars and you buy Mexican bonds from the government, Mexican treasuries. But before you do that, you have to buy the Mexican peso first, and then you buy Mexican treasuries, which means you're lending the government of Mexico money. And they're willing to pay you a lot. They're like, hey, lend us money. We'll pay you handsomely for that. Okay? So you will earn a very positive swap. Okay? Okay? Back in May, interest rates were 4. Now they're 5.5. Holy smokes. You're kidding me, huh? 5.5. 5.5. But let's say you're leveraged 50 to 1. So if you invest $1, you'll earn 5.5% on your $1. But the thing is, you're taking your $1 and you're turning it into $50, and you're going to earn 5.5% on your $50. Which, okay, have you guys heard of internal rate of return? This is a per dollar invested ROI. ROI would be the total, right? The total investment, how much money did you make? But per dollar, you can see your internal rate of return could be very nice because it's not 5%. It's not 5.5%, let's say. Just on interest, it's more than 250% a year. A per dollar internal rate of return, interest only. This is like buying a government treasury guaranteed by the government to pay you 250% per dollar you invest. Sounds pretty attractive. Well, you're leveraged 50 to 1. They're only actually offering you 5%. But you're leveraged, you see? Now, the next thing is, will this attract money? Well, okay, let's try to combine these things. Okay. So, let me move this over just slightly more. Okay, so rate increase at the beginning of November and in November, and then there's December. Okay, what do you think about that? Now the next part you would say, okay, what will Mexico do next? Because you're not investing today, you're investing into the future. And you could say, well, Mexico feels very comfortable around 8%. So Mexico would have to go from 4% to 5% to 6% to 7% to 8% to basically go back to neutral. And you know they're not going to do it one meeting. They're like, we're going to raise interest rates by 4%. So they're going to have to do it over several meetings over the next, let's say, year or two. Which means there are more interest rates coming. And what seems to be the pattern is when Mexico raises interest rates, this happens. So this goes back to Steve's question, should I be buying this or should I be selling it? Well, if you buy it, it's going to cost you a lot of money. Every day you're going to get taxed because you're borrowing Mexican peso and it's expensive to borrow. But if you invest and instead you lend the government money, they will pay you handsomely. And here's the cool thing. If you buy a Mexican government bond, okay, and you buy it a 1 year, okay, you buy a 1 year bond and they pay you, let's just say 6%. And over the next year, they raise interest rates to 7%. Okay? Will you get a raise if you bought a Mexican bond? No. In fact, the value of your bond will fall. Because I can just buy a new bond that pays 7%. Why would I want your stupid bond to pay 6%? All right? So anyways, if you actually bought a bond, you're locked in for 1 year and you will be guaranteed 6%. Now, you don't know the value of the Mexican peso 1 year from now. It could fall in value, but nonetheless, you will get paid in peso 6%. But we actually are a cash investor, which means if you buy Mexican peso today and they're paying you 5.5% per year, you get paid every day. You get paid 1/365th of 5.5%. Now, there's some conversion fees and brokerage fees and liquidity partner fees. So it doesn't actually work out to 5.5, but you have to compare all those fees are going to be the same on the Great British Pound that only pays you 1%. So it's still way more. I mean, they all have all these costs associated with them, but that's just the cost of doing business. So every single day at 5 p.m. rollover, you get paid 1/365th of 5.5% of your leveraged money, not the dollar you invested, but the $50 of Mexican peso that you invested because you're leveraged. Okay? You get that? So your internal rate of return is 50 times higher. That's why your IRR is great. But here's the cool thing about being a currency trader. Not a futures trader, not a bond trader. Because someone asked me the other day, maybe it was non-farm payrolls, they only trade futures. What do I think about that? And I said, well, let me think about it. It's dumb. And he's like, why is it dumb? I'm like, well, you're not as leveraged. It's not that you need the leverage, but you can't get it if you wanted to. And the other thing is, you don't get paid income. Why would you trade currencies and not collect an income? Look, wheat doesn't pay you interest. It has carrying charges. I get that. But with the currency, why would I want a futures contract? Here's what I do. This is what the Wayne do. Because of my good conscience and my good soul, I lend the good people of Mexico money. I lend them money. I'm an international financier. Okay? Hey, look, if you can't get a good-looking person to pay attention to you, just whisper in their ear that you're an international financier, and suddenly you become more attractive. Have you guys tried that yet? Oh, so what do? I'm an international financier. You're like, what? Yeah, for example, I lend the good people of Mexico money, okay? Because it's an emerging economy that I believe in. I'm like a philanthropist. It's another way to get good-looking people to, right? To to talk to you. What do you do for a living? Well, I'm mostly an international financier, but I'm spending more of my time on philanthropy these days. They're like, So you're like, because you're a philanthropist, you lend emerging markets like Mexico and South Africa, you lend them money so they can further develop their economy. Now, what you forget to tell them is you charge Mexico 250% a year. Well, it's not true because you're actually leveraged, but the cool thing is you collect at a bare minimum. If you made no pips, 0 pips, do you understand that? 0 pips. If you never made a pip on the 365th day you broke even, you still would be up 250%. Because you're a kind, good person like me. South Africa's even more. Okay? Now, how about this? How many people here remember I traded the Turkish lira for 10 months? I held a trade. 10 months. How many people remember this trade? I held it for 10 months and I earned 0 pips. Okay? Anybody remember? Jim says he does. Okay? Now, I made 0 pips. 10 months into the trade, I broke even. Okay? What was my return on investment? And specifically, what was my internal rate of return on this one trade? I made no pips. One %, 10%, 100%? No, I made 1,000%. And I never made a pip. Well, I did earn a pip, but by the time I got out of the trade, I had no pips. Because I'm a baller. Yeah. Yeah. Whoa, 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 1,000. 1,000%. Yeah. Yeah. It was great. Great. Yeah. Yeah. Cool. That's awesome. Not for you, Brian. Brian's like, I do that every other day. What the hell happened to my Cardano, Brian? What the hell? It's your fault. What did you do, man? Cardano was all the way down to $1, huh? Gee whiz. What the hell? Yeah, gee whiz. I guess I should have done what the Solano is what I should have done, but I don't know. Solano's probably down. Oh my God. Yeah, I don't care about was. There you go. Inflatable boat services. My intro to swaps. Thank you. You're welcome. Did you guys click the thumbs up button? What about Shiba? Yeah, I think that's down at least 50%, huh? But didn't we just hit like 40,000, 40K on Biddy? Wait, I have that under commodities, huh? Look at that, huh? 40,000, we're doing it right now. Look at that. 39, 40, 40, 40, 40, 40, 40. Huh? So, Brian, are they going to do the smart contracts or not? What should I do, Brian? Help me out, Brian. Curve? Yeah. Well, here's the problem, Darko. You wouldn't buy something like that because you want to double your money. It'd be like a venture capitalist investing, $50 million into a brand new technology that's going to revolutionize the world and double their money. The only way the venture capital market model works is if you 10x it. Minimum. Okay? So for every dollar you invest, you need to make $1,000. So it'd be like my carry trade where I earned $1,000 for every $1. But you need several of those for that to work out, right? So anyways, whatever. I thought Cardano would be used when the government finally admitted that companies that were being hacked and they had to pay like $100 million in crypto to get their systems back, that the companies were actually paying it. Remember? Before companies wouldn't admit it. But then they're like, no, we had to pay it in Bitcoin. So the government was dumb enough to say, and it's probably not 100% true, which is even dumber, but they're like, hey, we got the Bitcoin back. I'm like, what are you talking about? Oh, no, well, we're so clever as a government with all our brains. We were able to track it all back and get those Bitcoins. Like, first of all, I don't really fully believe you. I'm like, okay. But here's the other thing. As soon as they said that, I said, well, that's the last time the hackers are going to ask for Bitcoin. They're going to ask for Cardano or Solana. Which you just wouldn't be able to do that. You just wouldn't be able to we'll just track it back. Nope, you couldn't do it in that situation, right? So that's why I thought, that would be some good money. Okay? Robin, thought he would be rich. Yeah, I bought 11 million Shiba Inu. 11 million. But I actually win because my son was asking me why didn't I buy Dogecoin? We were having burritos one time at a Mexican hole in the wall that we like. We're sitting there and he's like, why didn't you buy Doge? I said, okay, well, let's talk about it. When Doge was worth, when you could buy Dogecoin for 0.1 or Monero, Solana, Cardano, but they're all kind of the same, right? So anyways, I said when they're worth 0.001, so the point was it was worthless. So if I paid 1/10 or 1/100th of a penny for something that's worth 0, I overpaid. So the fact that it's worth 30 cents now, or again, selling for 30 cents doesn't mean it's worth 30 cents. It's actually worth 0. Okay? Yeah, no, that's cool, Darko, right? But imagine you're having a conversation with your teenage son. Because some guy on YouTube bought a whole bunch and he's got a lot of money. So he's like, Dad, why didn't you do it? I'm like, well, it was worthless. So I don't care if it was worth 1 penny or a half a penny or 1/100th of a penny. It was worthless. It wasn't worth anything. So that price would have been too much. So we were talking about that, right? So then when Shiba Inu came out, I just bought a whole bunch because I wanted to follow up the conversation. I expected it to go to 0 and I lose the value or the price of my 11 million Shiba Inu coin falls to a point where it's worth nothing. And I go back and I say, well, here's an example of buying something that's worthless. Guess what? Eventually it will be worth nothing. So whatever I paid for it is still too much. Or it goes to $1 and I get 11 million bucks and I buy my son a car. And I'm like, you're smart, boy. You're going to MIT, son. MIT. Okay? So either way, I win. And I'm pretty sure one of them was going to happen. Well, okay, the term money is also a very interesting thing, but I don't want to get in that code name. But yeah. Okay. All right. So anyways, what are you going to do, man? What are you going to do? We're at 40K and going south. Let's analyze this. Where's the support? Technically, we are going to stop at 38.5 or 36.5, let's say. Okay, who's going to buy it? Who would buy it at, let's get the better number here. Who's going to buy it at $38,859.14? Anybody? Who's going to do it? Anybody? Bitty bugs? Yeah, mixed bag. Not everybody agrees. The one thing I like about Bitcoin as a store of value, for example, it's not a medium of exchange. Okay? Okay? Bitcoin's not a medium of exchange, but it could be a store of value. You could buy it and hold it or whatever. It doesn't mean it'll go up. It's just that it can do that. Okay? So it's interesting to think here. The next part of Bitcoin that I like is that we've pretty much mined them all. We'll add a little bit more supply, a little bit more, but some of you guys would know we're gonna hit the number, I don't know, in a year or two, but there's so little Bitcoin being mined now relative to a few years ago that it's just kind of trickling in, but it's an event horizon. Okay, do you guys know this? You have the sunshine, here's the sun, and then around it is a gravitational force. Okay, and here's your little spaceship. Okay, you can go here in your spaceship, and you're slowly getting sucked in toward the sun because of gravity. But you have enough thrusters that you can actually stop, hold, and you can observe. And you're like, I see the sun and all the things going on. And then you're like, I want to go home. And you turn around and you can go home. Well, the next spaceship comes a little closer. And you want to get some really good observations. So you look at it. And now you can really see the sun. And now maybe with your tools and stuff, you can see inside and you can see whether it's got a solid core or not. Is there a giant magnet in there? And blah, 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 blah. And you're like, wow, I got all my observations. Great. So you turn around and go home. Okay? Here's the interesting thing. When you turn around to go home, okay, it might take you a year to get back where you were because there's so much gravitational force, you almost have no momentum going back. You're using 99% of your energy just to slowly get back here, and then by here, okay, you're only using 50% of your energy. You're like, wait, you only got half as far, but it'd actually be higher than that. It'd actually be significantly. You might be using 5% of your energy to go home here, but 99% of your energy, and you're only halfway there. The point is, and then you get here, okay? You get here, you cannot go back. You cannot go back home. You will crash into the sun. There's nothing you can do about it. You're dead. Does anybody know what this is called? The pink circle around the sun? Yep. The point of no return, but what's the technical name? The event horizon. Correct. So at this point, you're in here. So there's a couple of ways of looking at this, right? The closer you get to the event horizon, the slower it is going to be returned. Okay? But in a different fashion, I probably should have had let's use a different example now. You want to go the speed of light. In your little spaceship. Okay? C is the speed of light. Okay? To go from 0 to 99% of C. Then let's say you could do this. You got all the way to 99% the speed of light. How much energy will you need to get from 99 to 100%? How much more energy? To go from 99% of the speed of light to 100% of the speed of light. Probably 10,000%, maybe 100,000, maybe a billion. percent. Yeah. Infinite, probably, right? So what I'm talking about is like the closer we get to 0 Bitcoin being mined, the slower it becomes, and it gets slower and exponentially slower and slower and slower. I don't know. I suppose there is possible when the whole industry stops. I don't know. I'd have to look into it. But I wouldn't be surprised if we get to 1,000th of a Bitcoin can still be mined, but is never mined, right? And then it's 1,000,000th of a Bitcoin, and then 1,000,000,000th of a Bitcoin. At some point, it's done. Even if it's 1,000,000,000th of a Bitcoin to go, look, philosophically, it's done, right? So that's one thing I like about Bitcoin is it will be out. Okay, we will run out of Bitcoin. There will be a fully mined Bitcoin. It's sort of like running out of gold. There's just all gold in the world has been accounted for, but that doesn't mean the supply and demand for gold goes away. Well, supply is constant; it doesn't go away, but demand will be there, right? And there'll only be so much Bitcoin. So if you want a Bitcoin and no one wants to sell it to you, you're going to have to pay more, and then convince somebody. And so that's kind of interesting, where, of course, Shiba Inu, for example, there's an infinite amount. It was never going to be worth anything. That's the whole point. Transaction fees are deflating Bitcoin. Well, that doesn't explain this. Okay. Yeah, but it doesn't matter, the articulated dreams. In that sense, the supply falls a bit, sure. But I don't think it'd be statistically relevant. ETH, sure. Well, but that's different, right? So Brian says don't do Bitcoin for multiple reasons, but you have to understand most people are less informed, and they just know Bitcoin is like, there's Bitcoin and then there's all this other stuff. So Bitcoin is just Bitcoin is Bitcoin. It's even less crypto now. It's just Bitcoin. It's just a tradable asset. It's not really money. It's sort of a store of value. I mean, think about it. It's some sort of asset on a ledger. Right? It's some sort of unit of account, but not on a major scale. But it can be accounted for, right? And therefore it can be saved. That's it. It's a tradable asset that can be accounted for. You can't cheat Bitcoin. You can't just create your fake Bitcoin and go out on the street like, hey, Bitcoin, get your Bitcoin here, right? No, so your Bitcoin is real. And you can securely store it, and you can securely show somebody that you own this asset. So all of that is quite good. It's not like, buying Liza Minnelli tickets on the street. I don't know if she's even alive. But, you're like, wait, the scalper, he might have fake tickets, right? So anyways. So Bitcoin is Bitcoin is Bitcoin. When you say Ethereum or Ether, what we're saying is something quite different. This is an ecosystem. It's a technology. It's a platform. So what you should then need, or what you would need what you would need to do now when you're looking at these other things besides Bitcoin is, will this technology built on the Ethereum platform work? And will it be adopted? You're almost like a venture capitalist. And in like Brian's case, he is a venture capitalist. You could say it that way. Okay? Where he can look at things and say, I see the value of this technology built on this platform and whether it can be adopted, whether it's scalable, and whether it produces value so it can scale. That would need to scale. Bitcoin cannot scale. It never could. It never had a chance. But now when you're looking at something else built in Ethereum, now there's other things it could be built on. You'd do the same process. But now you have to say, well, it's a technology built on a platform. Will this service on a platform work? Is it legitimate? Will it work? Does it make technical sense? Will people need it and use it? And therefore, will it be adopted? And will it be adopted as such that it can scale big? Can everybody in the world use it? Okay? Should you work in the United States, the United Kingdom, and Uganda? Let me tell you, if it's working in those three countries, you got a good start. And if you're an early adopter, you're already filthy stinking rich. Okay? But that's a different decision. And then you say, well, what about, Tether? And look, then you still face currency risk, so you might as well just trade the currency, in my opinion. But whatever. Okay? Cool. And then these assets can then be shared, and people will pay you for that. And it's a lot like you lending money to Mexico. You can lend money or put up money for liquidity, like a liquidity pool provider, and earn income. So that's cool. Okay? But I want you, for those that are not familiar with crypto, don't just think one is the same as the other, like, oh, I'm going to do this or I'm going to do that. Well, there could be radically different decisions in that process. So I'm not claiming to be an expert, but I know a little bit. Okay? And the decision-making process is quite different. Okay? So like the idea of buying Shiba Inu or Doge is actually quite ridiculous. It never was built to create value. Therefore, it's not valuable. There's no productivity. There's no use. Now you say, well, the price went up. Well, that's different. Okay? That's like saying I should go down to my local nursery to buy flowers to plant in the spring, and I should pay $30,000 for a tulip. No, I don't want to pay $30,000. I don't want to pay $3 for a tulip. Okay? So there's a difference between price and value, and I'm very much value focused. Okay? Yep. Well, I think I went too long today. I'm sorry. I apologize. Interesting day. I guess I didn't sleep enough again. I was up quite late trading. I guess why don't we burn through the dollar pairs and then move on? Move on up. All right. So I bought dollar last night, and I like being a little bit richer every day. So this is good for me. You are the reason I trade. Okay. So I sold this at the central pivot point, and now I'm filthy stinking rich. And tomorrow I might be broke on the street, selling my body for money. But we'll see. It's a good start. Target here is 71 or 70. I'm thinking more 70 or even beyond maybe, but I'm thinking down to 70-ish, maybe even 69. And then I might take my money. And somewhere in there, there's going to be a big rally. So don't be shocked if it does this and then back up. And then back down. My worry is we get down to S. And it's the confluence of the S monthly, M1 weekly. And this produces the false rally. So I don't want that. But that really feels like that's going to happen. Pub's like, hey, are you always trading at or near the pivot zone? Yep. What? I chuckle because are you not doing that? And that would be like, wow, really? How's that going? Okay. Anyways, so yeah, I'm going to take this down. I'm really worried about the third week, right? The false rally. And that's going to squeeze me out of my shorts, right? So there's a short squeeze coming. And I don't want it, but I know it's there. I just know it. It's always there. And I'm always in that situation where I don't want it to happen, but I have to be brave, right? No, I know, Pub, but I'm sorry, man. I didn't mean to be pissy. Look, it's Monday morning. I'm exhausted. I've been up late trading. I'm already 15 hours into my trade week. A lot of people are just rolling in starting, right? And I'm 15 hours in, so my eyes are heavy. I'm a little bit cranky. Okay. So anyways, so it's just I wouldn't know how to trade any other way is really what I'm saying. So yeah, I confirm. I concur. Okay, cool. So I put this here, 68 would be the number, and it didn't quite go high enough for me to trade this one, so I didn't. That's what a plan is. So it didn't quite go high enough. It got close, but the thing is, Kiwi and Aussie are not the same, are they? Kiwi and Aussie are not the same. Do you guys remember? I compared them. I said you should short Aussie before you short Kiwi, so I did. This is more dangerous. You would have had to sell. Okay, you're going to say, Wayne, it's a daily. Yeah, well, it ain't a weekly and it ain't a monthly, so you do you. Okay, so on and so forth. Pound came down, but I'd rather sell euro. Okay, so pound went from 30, 50. Am I seeing that right? Down to, it's only down, am I reading this? 35.60. And it's, okay, it's dropped a whole 20 pips. Euro dollar fell from 13.60, okay, down here. So this dropped 20, this dropped 65. Why? We compared pound versus euro. So I said when the dollar's strong, you sell euro dollar. When the yen is weak, you buy pound yen. We discussed it. And this dropped 20 pips, this dropped 65 pips. What we call relative strength. Now, in the swing trading group on Thursday, we spent quite a bit of time going through relative strength exercises. And so now you can make these decisions both technically and fundamentally to say, buy this one when you can, sell this one when you can. Great. Going over here, USDCAD. Okay. I have a trade plan. And the trade plan was, holy smoke, buy a double bottom. It's up. Great. Fine. Move your stop to break even maybe. Or here. And the challenge is going to be here. Why? Okay, let me explain this. Give me a second here. Okay, bears are going to sell it here because of the 21 and here because of the central pivot point. They're also going to sell it here because of the 55-21 convergence, but also here because of the M3. So we're going to call this now Plan A bear, Plan B bear, and this was Plan A bull. Cool. So it's going to do this, this, or this. Which one? I don't know. How would I know that? No, I don't scalp. I do scalp, but no. 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 I'm just going to say no. I mean, I can and I have, and it depends on the account and all that kind of stuff, but I'm just going to say no. Okay? Scalping is great for income, but it kills your Sharpe ratio. Okay? Right? You might tell, it might show an investor, you'll risk $100 to make 20. So you'll have to have 5 times more winners, which tells everybody in the world, A, you don't know how to take a loss, and B, you don't know how to trade. You create income, but no value. Okay? It's like, have you seen the show where these people walk around the outback of Australia with a metal detector? And they're like, oh, I found something. They pick it up in the dirt and they have the dirt in their hand and they go over the metal detector and then they throw some of the dirt away. No, it's still in their hand. Throw some of the dirt away. And then finally they find it and it's something this big. And they're like, I found some gold. Okay, they earned income. They found some gold. But are they in control of whether they find gold or not? Right? Like, I don't know. I don't know if it's a great example, but they're finding stuff, but they're not really creating any sort of value. They're just walking around hoping to get lucky. Now, some people, the way I describe that, you're going to get really mad at me about scalping. So I didn't mean it that way. Also, other people will get mad about some other reason I'm saying it. And I'm not just saying that. So don't get mad at me. But what I'm trying to say is what I do care about is small amounts of risk. I'm interested in letting my winners run. Those are my biggest concerns. I want to keep my losses small, and I want to let my winners run. So that would be counter to this idea of scalping, because you don't, by definition, you don't let your winners run. So I'm okay if you scalp, but it will ruin your Sharpe ratio. Now, so if you're trading your own account, a Sharpe ratio wouldn't matter. You're just trying to earn income, but I still would ask you to have some capital appreciation inside your portfolio. So the difference is, just so you guys, we're all on the same page, there's income, okay, versus wealth. Whoa, that's my crazy mouse. My mouse is having problems today. Okay, so an example is a lawyer that makes $250 an hour. No, $500 an hour. Okay. And here is someone living on a retirement account. Okay, this is per hour, and this is per day. Okay. All right, so $500 per hour, $500 per day. Which one is rich and which one is wealthy? Well, the lawyer trades his or her time for money. The lawyer is poor. Now they live in a big house, they drive a fancy car. Okay? But they're poor. The retired person that wakes up and has $500 to spend today, or has earned or collected or been paid, is wealthier. They don't do anything. They don't trade anything. Well, what they've done, though, is over a period of time is saved. And this money doesn't come from the government buying their votes by throwing beads and bread into the crowd. Instead, what's happened is this person is saved and they own assets. And the assets both have appreciated, but they may also provide an income in the form of interest payments, dividends, or rents. The appreciation comes from the value of the stock going up or the value of the property going up. So these things work 24 hours a day, 7 days a week. You never have to give them vacation. You don't have to pay health benefits. You don't have to pay all these other things. And at the end of it, okay, these things are happening. Even if you're retired, they're still going up and down in value. They're still earning income. Meanwhile, you're sucking this out. You're drinking your tea, smelling your roses. You either wake up at 4 o'clock in the morning or 10 o'clock in the morning. Nobody cares. And you've already earned your money, and you're going to earn money tomorrow and the next day, and you don't do anything. Now, you could do this when you're 40, for example. You're like, oh, well, that's just old people. No, I didn't say anything about that. You can be 40 years old, and you're like, okay, you own 5 houses, right, that you bought with money you saved. Meanwhile, you have a regular job with a retirement account, and you're maxing that out, and your company is matching you, and you live modestly because you had to buy all these houses, so you had to sacrifice a big TV. You probably had to sacrifice some holidays. Instead of going to the Caribbean, you go camping. And you do that until you're 40, 45 or something like that. And then you're like, I have enough. Okay? And you're done. Your houses go up in value 10% a year. Your renters pay the mortgage. Your net worth goes up as they amortize. Okay? You see? And the lawyer has to go to work all day, every day. And if they don't have a billable hour, if they can't find clients, if they get sick, if they go on vacation, they don't earn anything. They're poor. They're just walking around the outback hoping they run into a new client. Hey, you need a lawyer? Hey, you need a lawyer? I'm $500. Whoa, where'd you go? Right? And this person doesn't do anything. They wake up, they drink their tea, they smell their roses, they read the newspaper, and they are richer today than they were yesterday. So scalping is a lot of work. I love scalping, by the way. I think you need to learn scalping so that you can enter your trades better. But ultimately, scalping is income only and no capital appreciation, and income only because you're picking up pennies on the street, but not income from earning interest like an investment. So you're not earning the swap, okay? But you're picking up pennies. And that's not how you get wealthy. So the reverse of all of this is maybe you scalp USDCAD or something, but going back to like we were talking about Mexico, I would never in a million years scalp this. A, it's expensive. And B, if you know how to trade, why would you give up the income? And of course, you would look at the central banking policies and compare them to others. And you'd look at the macroeconomic trends of nearshoring and everything, and the economy in Mexico and the economy in the United States, they're our largest trading partner. And you'd make all these decisions. And because you've done good analysis and you've made wise decisions, the trade you make is more valuable because you have added more value, and your net worth goes up because you're worth more. Your analysis is worth more. Your trade is worth more than picking up a scalp on this. Why would you even do it? And so, could you do it? Do I like to do it? Yeah. But I'm aiming to achieve different goals. Okay? You know that? You see that? And by the way, if you were the retired guy trading Forex now, and you wake up and you're like, I have enough money. I can pay my mortgage. I can buy food. I can buy my grandkids Christmas presents. I can go on vacation whenever I want. You're like, I live a cushy life. These are good years. I have more than enough money. Would you be a scalper? Like, you don't need to make an extra $50 today or whatever it is scalping. Because you just like, you don't need it. Like, well, why would I do it? Why would you waste your time? You're like, you could be outside enjoying the sun. Why would you try to make an extra $50? You already have enough money. So if you're going to make the decision, you might as well spend your time thinking about it, doing the research, analyzing technicals, fundamentals, global money flow, all that kind of stuff. And you ponder, and then you make a better decision that you can sit on this trade for 6 months instead of 6 minutes, and you have capital appreciation work for you. You have interest paid to you every single day. And you don't have to work hours and hours and hours because you made the trade. And maybe once a week you check in on it and you're like, yeah, made money. That makes sense. And every single day you get paid. And you just happen to check the markets when you're finished your tea and you're smelling your roses. And you're like, oh, I think I'll check my Forex account. Oh, yep, that peso. Paid me my interest payment again today. That's great. Guaranteed an internal rate of return of 250% a year. And so how's the peso doing with the dollar? Oh, yeah, well, that's lined up with seasonality. So everything's right as rain. I'm a little richer today than I was yesterday, but I didn't do anything. And that's where you need to be. Peace on earth. May the pips be with you. May our profits be above average. Please tell YouTube this is quality content. And please open an account at Tradersway and join the family. At least give Tradersway an opportunity